Why are the Chinese gold jewelry companies, some of them, some of these bad apples, bad actors, like you call them, why are they complaining? Well, like I said, because they bought a lot of recycled gold in the past that they did not declare to the Chinese government. And they also bought investment gold in the past, like through traders from the SGE that were VAT exempt. And then they melted that gold to make jewelry. So that's, you know, I mean, gray area borderline, I guess, is illegal, right? You're not supposed to do that, but they did it.
There's a lot of jewelers out there who are basically cheating the Chinese government, and some that weren't, and that created a problem. So I guess what has the Chinese government done exactly to stop that, and why are people like Bloomberg saying that it's going to be bad for gold, and why are they wrong, Eric?
Okay. So before we go to the new system, I just want to say one last thing. The Chinese jewelry stores, a lot of them, like we were talking off camera, and you asked me a question. You said, are these Chinese jewelry stores, are some of them also bullion dealers? And I said, yes, they are. So what they do is they would, sometimes they are the recyclers. They buy back old jewelry and they melt the gold and they remint it into new bars and they sell those, gold bars. And again, they don't collect VAT. So, or they do collect VAT in some cases, I'm sure, and they pocket it, right? But most of the time, for those gold bars, they don't collect VAT, which they're supposed to, because those are not, official gold bars from the SGE.
In their discussion, Mario, Maneco, 64, and Eric Yeung talked about the truth behind China's recent change in gold taxation, something Western media, especially Bloomberg, reported incorrectly. Bloomberg and others claimed that China had removed tax exemptions on gold, suggesting this would make gold more expensive and reduce demand. Eric explained that this interpretation was completely wrong. He clarified that China did not introduce a new tax on gold. Instead, the government simply tightened the rules to prevent widespread tax evasion and unofficial gold trading happening outside the Shanghai Gold Exchange (SGE). Before this policy change, standard investment gold bars sold through state-owned banks and the SGE were already exempt from VAT, while jewelry and commemorative gold products carried a 13% VAT built into their price. However, many jewelry retailers and small dealers were exploiting loopholes. They were buying recycled or illegally sourced gold without paying VAT, selling it to consumers at lower prices, and avoiding government oversight. To stop this, China's government decided that, from November 1st, 2024 onward, only gold traded through official channels like the SGE and the Shanghai Futures Exchange would remain VAT exempt. Gold sold outside these platforms would now be taxed. At the same time, the government reduced the VAT for jewelry manufacturers and retailers from 13% to 6%, making it cheaper for legitimate businesses to comply. Eric emphasized that these changes do not hurt consumers or gold investors in China. Ordinary citizens can still buy standard investment bars tax-free through official banks or the SGE, just as before. The real purpose of this new system is to close loopholes, enforce transparency, and force all gold trading into legal, trackable channels. By doing this, China is strengthening its official gold market and giving more power to the SGE, which is already one of the largest physical gold markets in the world. Eric argued that this move will actually increase gold demand within China and could pull more gold out of Western vaults like those in London and New York, shifting the balance of global gold trade toward Asia. They also briefly discussed silver. China recently added silver and tungsten to its list of controlled critical minerals, meaning exports of these metals now require government approval. Meanwhile, countries like the US and India continue to import large amounts of silver, effectively draining Western inventories through the London Bullion Market Association, LBMA. Eric's conclusion was that the Western narrative that China's new VAT rule will hurt gold demand is misleading. In reality, China is consolidating control over its gold and silver markets, cleaning up corruption, and strengthening the role of the Shanghai Gold Exchange, making the move ultimately bullish for gold, not bearish. Thank you for watching. Subscribe to Fine Metals for the latest gold and silver insights.
There's a lot of misinformation in the West and even in China, as you told me earlier before we started. And the misinformation in the West is coming from sources like Bloomberg and other mainstream media. And they're trying to say, well, China, the Chinese are going to stop buying gold. They've imposed VAT, sell gold. And you tell me as well that there are some bad actors in China involved in the gold market, and they're spreading misinformation. So I couldn't think of a better person than you to explain to us what's really going on. So I'll let you, I'll let you talk now.
So I'm just going to make it simple for your audience because the process is complicated. Okay? Like, how the VAT system works for gold in China. Now, I'm just going to start off with telling the audience how it worked in the past. So how it worked in the past is that if you bought what they call standard investment gold bars from a Chinese commercial bank, which like these banks are all state-owned. So the Chinese government own these banks partially, right? And if you buy these things called standard investment gold bars from the banks, you're VAT exempt. You don't pay any VAT, zero. And if you buy these things called commemorative gold bars, which are the pretty designed Lunar New Year, etc., you know what I'm talking about, Mario. Like the pretty gold bars, you have to pay VAT. So, like, that's the difference of the different tax categories for different gold bars at the Chinese commercial banks in the past. Now, if you buy gold jewelry, you're charged 13% VAT across the board. Doesn't matter where you buy it. But the 13% VAT is embedded in the gold jewelry price. So people, like when you see an invoice, you don't see the VAT because it's embedded, okay, in the piece of gold jewelry price. And what happens is that whoever is selling you that piece of gold jewelry, the jewelry shop, they are supposed to report the sales to the Chinese government and remit the 13% within that sales price as the VAT, price that they charged you to the Chinese government, minus what they call a input VAT. So because when they bought the source gold, that gold also was charged a 13% VAT, right? So they get tax credit for that through what they call a special VAT invoice, which is for short form is SVI. Okay, so that's how they did it in the past. And as you can see, the problem with that system is that the gold jewelry shops, I guess a lot of them, would cheat the Chinese government out of that VAT payment. They just simply will remit that VAT. So they pocket that money. That's what they did. A lot of them. And a lot of them also bought gold, that is not from the SGE, like recycled gold. And although, recycled gold, you buy it, you're supposed to, charge VAT, like I just said. They might, again, number one, they might charge the VAT, pocket it, or they might simply don't charge the VAT and, go into this price war with the legitimate gold jewelry stores. The only place in China after November 1st, 2005, where you can get VAT exemption is or physical gold is at the Shanghai Gold Exchange, SGE. Now, let's say you're a member of the SGE, and there are three types of members. Let me define that at this point, okay? You have, or actually, there are more than three kinds, but I'm going to focus on the three major categories so that we can focus on our discussion here, okay? So the top tier are the bullion banks, are the Chinese banks, commercial banks, Chinese commercial banks that are state-owned, like ICBC, the Industrial Commercial Bank of China, and Bank of China, BOC, amongst others. And then the second tier, and also the first tier, you have the big jewelry manufacturers and retail chains. Okay, they're also first tier. Second tier, you have people like the CTAs, the commodity trading advisors, who have their own firms, okay, to trade gold and silver at the SGE. And then the lowest tier are individuals, like guys like me and you, Mario. If we want to open an account and trade at the SGE. So what happens? Let's say if you want to buy and sell physical gold at the SGE. If you buy and sell physical gold at the SGE and you don't take delivery, it's VAT exempt. Okay? So that's like within the SGE system, the physical gold is there because the SGE backs up each contract with an equal amount of physical gold. So it's one-to-one backing at the SGE. Okay? For gold. There's no rehypothecation. So if you buy gold at the SGE and you leave the gold at the SGE vaults, you get full VAT exemption, just like before. Nothing changed. Now, after the new rules, Mario, the gold jewelry retailer or manufacturer, okay, they get a 6% withholding VAT. Okay, so instead of submitting or paying 13% right off the back, they only pay 6%. So it's a 7% decrease. So they pay less. The Chinese government, in my opinion, is trying to do is to take all the OTC physical gold sources, okay, and funnel all that to the SGE. So, like I said, in the past, because the gray area is so big, a lot of gold jewelers they bought their gold not from the SGE, from the recyclers or from OTC, which is over the counter, maybe through domestic refineries, right? So they bypass the SGE. But in the future, all this gold buying is going to be through the SGE. In the past, the SGE only had 60% approximately. These are proprietary numbers, by the way, okay, shared to me by CTAs in China. So SGE had around 60% of the trading volume in China. And the other 30 to 40 is through, OTC and the retail gold market in China. Like I'm talking about the gold jewelry markets in Shenzhen, Sheibei, okay? Stuff like that. What these people are anticipating is that after the rule change, the 60% is good of the SGE market share is going to grow to 80%, Mario. So what that means, and also another effect from these new rules is that you probably guessed this already. The SGE gold price is going to be the lowest price.
Is this happening? Is this going to happen to silver as well, or is it already happening, Eric?
Well, silver is a different animal, Mario. Silver, like I explained in the past, China really they're indifferent on the silver price. They just want like their prime objective for silver is that they want as much cheap silver and ample supply, by the way, okay, of
Yeah.
silver as possible to support their industries, right? And military industrial complex. Because you need silver to build missiles, submarines, planes, etc. So they don't necessarily want the silver price to go up. But we're at the point where right now, as you know, India is importing a lot of silver. The LBMA is in technical defaults because they'd already told India that it had to, deliver the silver T plus 30, T plus 60. So China, we can move into the next topic, as you know, just again on November 1st, announced the Chinese Commerce Ministry of Commerce announced that silver and tungsten are going to be critical controlled minerals in China for export. Okay, so in the past for silver, if you want to export silver, all you need to do is to do a report. Okay, you just report it to the Ministry of Commerce and you export it. But the new system for silver export in China is called review and quota. And in China, when they say review and quota, it's almost like they just really don't want you to export it. So, in my opinion, it's the first step to complete, banning or selective banning of the export of silver.
The meeting between President Trump and President Xi, maybe the Chinese have gotten the nod from the Americans and they really want to push this de-dollarization, or maybe they didn't get the nod or they didn't get what they wanted from those negotiations. So they've decided we need to push this and accelerate the move towards gold and using it as a major reserve asset.
Maybe it's possible that he got a nod, and that at this stage of the game, it's beneficial to everybody that the gold price appreciates and get to something like $8,000 to $10,000 US dollars per troy ounce, like what Jamie Dimon of JP Morgan said recently. Because at that US dollar price of physical gold, the US government, like we discussed, I believe in one of our previous interviews, can tell the U.S. Treasury Department to revalue its 8,133 metric tons of physical gold, and they can get $2.6 trillion from that revaluation, and that will effectively take care of more than the $2.16 trillion of long duration U.S. Treasury bonds that the foreigners hold. China right now is in a basically in deep talks with the Hong Kong government to set up offshore SGE contracts at the Hong Kong Gold Exchange. Okay, so we talk about that offshore vaulting in Hong Kong. And my analysis, my prediction is that they're going to use that offshore vaulting system. The first one in Hong Kong, maybe the next one in Dubai, Saudi Arabia, Thailand, Bangkok, New Delhi, Moscow, etc. So I'm just throwing names out there, but those are the offshore SGE vault potentials. So once they set up Hong Kong and they get it running, I think what's going to happen is they're going to use the gold that they parked at the Shanghai Futures Exchange. We talked about that. It's almost, I think, over 80 tons now. It's probably going to go to 100 tons, in my opinion. They're going to take that, and a lot of it probably, and put it in the Hong Kong SGEI, which is the Shanghai Gold Exchange International vault. And they are probably going to use that for international offshore trade collateral, or like I explained in the past, like interbanking repo collateral for liquidity.
Yeah,
So
no.
if they do that, have that going, and the SGE being the primary gold um, distribution center in China, like I said, because the VAT exemption is only at the SGE from this point on, then I think it's possible that the SGE, instead of being a semi-price taker, okay, what we are right now, is going to be a price setter for the price of physical gold going forward.